A few important questions that stakeholders often have about a business is how much of the business is funded using debt and how much of the business belongs to the owners. The answers to both of these questions can be found by looking at the accounting equation. Most businesses are required to report their accounting equation to stakeholders on a special financial report called a balance sheet. A balance sheet is a financial statement that shows the financial position of the company on a specific date. It reports the details of assets, liabilities, and owner's equity and shows how the accounting equation for the company is in balance, meaning that the assets equal liabilities and owner's equity. That's why it's known as a balance sheet. A balance sheet begins by reporting all of the asset accounts at the top of the report. Remember that assets are anything that the business owns, like cash, accounts receivable, and equipment. These are then totaled at the end of the assets. Traditionally, this total has a double underline at the bottom to indicate the end of this half of the accounting equation. Next, the liability accounts are reported below assets after a small space. Remember that liabilities are anything that the business owes, like accounts payable or loans. These are subtotaled at the end. Immediately following the liabilities, we list and subtotal all of the owner's equity accounts. This includes accounts like capital and draws. In order for the balance sheet to balance, the owner's equity must also include net income. Note that it never includes the revenue and expense accounts. These are included in the income statement. We just summarize them on the balance sheet by reporting net income. Once the accounts in owner's equity are recorded, they are subtotaled as well. Then liabilities and owner's equity are added together, and the total of the two categories is shown at the bottom of the balance sheet, with a double underline to indicate the end of this half of the accounting equation as well. The two totals, assets and liabilities plus owner's equity, are then compared to make sure that they are the same number. If they are, your accounting equation is considered balanced, and your balance sheet is done. There's a lot of useful information that stakeholders can learn from a balance sheet, which we'll discuss more in later videos. But that is why the balance sheet is considered one of the two most important and most common financial reports that a business produces, together with the income statement. To learn more about financial statements and other accounting topics, check out more of my videos on YouTube or visit torinorman.com.